All right, so we're recording. So I will say once again, good evening, everyone. Thank you for joining me tonight. So tonight we're going to be talking about risk management 101. So last week we talked about the various ways you can make money in the Forex market. We talked about you learning how to trade yourself. We talked about copy trading, which our broker offers. Then we also talked about our bot trading, which can help you trade your personal account. And then we also delve into the fact that you can make money from prop firm. And then we told you that you can pass your prop firm with our services. We can help you pass your prop firm and you can start making money in the shortest time possible. All right. Okay. So some persons took action. They registered with our registered broker. I don't think much person did the copy trading, but most persons are opting in for bots and they want to learn how to trade. So however route you want to take, okay, risk management is something that goes around any route you are taking. Okay, so straight to practicals. Whether you know how to trade or not, this class is going to be very helpful for you. And I'm going to be annotating, so that's why I'm on this page here. So I'm going to be annotating. Excuse me, let me see if there's anyone in the waiting room. Okay, there's nobody in the waiting room. Okay, my boss is here. Let me quickly, it's just a minute. Hello, sir, are you there? Okay. Okay, so I'll just go ahead. I think his network is a bit unstable, but however, let's proceed. All right, so like I was saying, so this is how we're going to run the class. So let us start from, I just want us to be practical today, okay? No too much theory. Risk management is a very practical stuff. As I'm sharing with you, then we'll talk. Okay, so now, let's say you have an account of $1,000, okay? Where is this dollar sign? Okay, $1,000. Please follow through. If you have a pen, write, but please follow through. This is the most practical way you can never blow your account again. I'm telling you this for sure. Even if when we pass the prop firm account for you and you say you want to be trading it yourself, because there are a lot of persons that, after you pass prop firm account for them, I'm telling you, as painful as it is, you pass $400,000 account for them, $100,000, huge amounts. Then all of a sudden, some of them don't receive their first payouts. I'm telling you the truth. You can go and verify this. A lot of persons who pass prop firm, I'm telling you, as painful as it is to buy the account, they've oh my God, some people don't even make it to their first payout. So it looks like all the effort is just in vain, So, and some people even follow signals. People don't even know how to follow signal. Even if you are in a group and they share profitable signals, some people still blow their account, even in a signal group. So, so the idea is risk management. If you know how to manage your risk, which is what see, this thing I'm showing you, please, it's practical. There's no long talk, okay? So I'll just be showing you why I'm talking. There's no too much talk. So let's say you have $1,000 account. This is your account size. Please, if at any point you cannot hear me or you need me to touch on anything that you did not get clear, just drop it on the chat. I would ensure to look through and just carry everyone along. Thank you. All right, so now let's say you have $1,000 account. Now, the best method I always advise is this. You have $1,000 account. What you can do or what you should do is divide this $1,000. Let me write it. Okay, let me write it separately now. Divide your trading, divide your trading capital by 20. In this case, in this our example now, we are using $1,000. So I will say $1,000 divide by 20, which will equal, which will equal what? That's 50. Am I correct? Let me not embarrass myself. I'm correct. That's $50, okay? Obviously, I'm correct. All right. So let me ensure everybody can see this. Please, can we all see this? I just want to get responses. Should I maybe enlarge the text? Is it clear enough, please?
Yes. Very clear, very clear, very clear.
All right, thank you. So now you divide your trading capital, but in this example, we're using $1,000. So divide your $1,000 by 20. This means $50. So what does this mean? What's $50? So it means that what you should actually be doing for every trade you are taking, you should be risking only $50. Before you blow your account, you must have consistent losing trade of 20. what I'm trying to say is, before you will blow this $1,000 account, you have to lose 20 times straight. 1, 2, 3, 20 straight times before you blow your account. And honestly, in all honesty, it is impossible. At least with a good trading strategy. You know, we've been talking about trading strategy since last week. We gave out our indicator. If you've been, if you have, excuse me, let me admit someone in. All right, let me proceed. If you have a trading edge, I'm not talking about having, do this one today, do this one tomorrow, do this one next tomorrow. Today you are here, next tomorrow you are in another group, next tomorrow you are, follow one pattern, stick to one strategy. If you follow that strategy, obviously you can't lose 20 straight trades. If you do lose 20 straight trades, it means that strategy has a problem, or you are not following it accordingly. All right? So this is the simple idea. What you need to do, divide your capital by 20. In this case, 50. So we are going to do a simple, oh my God, how am I going to do this now? Okay, yeah, I wish I didn't think about this. But anyway, I'll see how I can do this. Let me explain it this way. Okay, let me write about it this way. Yes, this is a good way. So now we are talking about 20 trades. For us to lose this $1,000 account, we need to lose 20 trades straight. So now, 20 trade. Before I do this, let me explain something. First. Now, last week, if you remember, while my boss was teaching, we talked about, when we're teaching, some of us, I don't know if you were here last week, but however, I will try and do a recap. When we talked about using our indicator, for example, we mentioned that anything you are risking in trading, at least, ensure you are making at least 1.5% or anything 1.5 of that particular amount. In my opinion, I would say at least 1 to 2. That's my candid opinion. What am I saying? I'm saying that anything you are risking, let me write it down. Any amount you are risking on a trade, ensure you are making at least times, excuse me, my at least supposed to have, all right. Ensure you are making at least times, where's my X? Times 2, at least. So what am I trying to say here? If I am risking $50 on any trade, now we say we are going to be risking $50 in all our trades. What this means is that at least when I risk $50, in my head, I should already know that, okay, if this trade goes against me, the only thing I will lose is $50. But if I win this trade, I'm going to make what? 50 times 2, $100. So that means, you will enjoy this training. So that means if I take a trade today, let's say tomorrow is Wednesday. Now, I take a trade tomorrow and I was risking $50 and I made $100. Let's say I close my trade for that day. I say, thank God, I'm not trading again. Then on Thursday, I now trade. I lose. What have I lost? I lose $50. I still have $50 profits. If I even now lose on Friday again, my account is at equilibrium. So it will take me 2 losing trade. You understand? To be break even. It will take me at least to lose 3 straight times before my account will even be in the minus. This is a very simple logic. We are going to do it. Let's do something. Okay. So now see, watch. We are doing 20 trades. So remember, 20 trades. All right, 20 trades. So let's say in 20 trades from next week, or let's say this week, however the case may be. Let's say my first trade. Remember what I said. We are doing our risk to reward is 1 to 2, meaning I only take profit when my risk is times 2. Okay. So now, please guys, watch. Or my daddies and mommies, anyone. Stars watch. Okay. So let's say I take 20 trades. Let's say I lose 12. Can you see that I'm giving this figure? let's say out of that 20 trade, today I lose, tomorrow I win. So, but in total of the 20 trade, I lose 12, but I win 8 trade. So I lose 12 times, but I win 8 out of the 20. So let us do the calculation. 12 times 50, that's $600. Yes, I'm correct, $600. Yes. Now remember, if we are to win, it means that for every win, it is $100. Please, I hope we get, because we are risking times 2. Anything we win, when we win times 2 of our risk. So it means that for this 8 trade, it is $100 that I'm going to win. So $100 is what? 800. So you can see that even as I had 12 loss, 800 minus 600, I still have $200 that I made as profits. Even from 20 trade, even though I had 12 losses, 12, see, it's more than 12. With 8 wins only, I still made a profit of 200. In Nigerian currency, if we are, converting, I still made 200,000 naira from losing 12 trade. If let me, I hope we got, let me copy this and let me copy this and let me clear this. Let's say out of this 20 trade, let me make this neat. Okay. Let's say out of this 20 trade, let's say I lose 13. I want to show us something. Let's say I lose 13, which means I won 12. Sorry, I won 7 trade. This will mean that I lose, or I have a loss of 650, but then I made a profit of $700. Even if we minus this, I still made a profit of $50. Yes, I still made a profit of $50. With good risk management, I still made a profit. I'm still in profits. Even though, some of us, the only way you define profit is when you have $10,000 as your win. That's it. Some of these things you see online are unrealistic. Some of them are falsified. I must be sincere with you. There is no, see, some of us here, we are into finances a lot. So you understand what I'm about to tell you. If you go to any real investor and you tell them, sir, man, I want to trade for you, and they say, okay, what is your risk to reward? Or sorry, what they tell you, what is your risk? Yeah, what is your return on investment that you are going to, excuse me, I'm sorry. What is your return on investment that you are going to bring for us in a year? And you start telling them 40%, 100%. A serious, oh my God, sorry. A serious investment firm will not take you serious. They won't give you their money. They won't give you their money. If you are telling them, I'm going to give you a return was of 20%, 40%, they won't give 100%. They won't give you their money. Because the same way you are telling them you are going to flip account and give them, that's the same way you can lose their money. The standard per year is not even more than 10%. Per year, it's not even more than 10%. That's when they will take you serious. So you too, as a trader, you must start thinking in this pattern. You must start thinking like this. All right? That the idea is for you to be consistent. 1%, 2%. It's a win. It's a win. So, okay, let's do another thing. Let me clone this. Let's even say, okay, this one, you are going to see how interesting it will become. Let's say you even lose 14 trade. Let's say you over traded or something like that. And then, the more I'm winning, you are reducing your risk. So let's say you lose 14 times. You see, 14 can you see the difference? 14 losses, like 14 times. So that would mean that automatically you lost $700. Okay, you have made a loss. Then if you win 6, that means, please help for it. Yes, 50 times this is 0.27. I'm correct. So in this case, you actually made a loss. But what? Your loss is what? $100. Your account is at a drawdown of $100. But guess what? You didn't blow your account. That month, you can say, okay, I'm in drawdown. It's okay to be in drawdown for in some certain months. Some months, because of the market, you are not the one. Sometimes the market may just be misbehaving. It's okay to say, okay, this month I'm in a drawdown of $50. I'm in a drawdown of $100. The next month, let's say you now understand your strategy better. You now know how to enter the market. You now know what particular time, because you see, every market works at a particular time. There's something called sessions in markets. You don't just trade anytime you like. Okay, so those are some of the things you'll be learning. Don't just trade anytime. The same way you go to work at a particular time. That's how some market move very, very well at a particular time. Okay, you don't just say, I wake up and you start your trading anytime you like. No. That's why some people lose money. You don't just wake up 6 o'clock and you enter the market and you press buy or sell. There are times you may even see your setup. If it is not correlating with the particular time you want, you leave it. Some pairs move faster at a particular time. All right. So let's say you now understand your pair or something like that. And let's say you are now better. You take 10 loss, 10 wins. This will automatically mean that you lose 50 times this, you lose 500. And then 100, you win, you have 1,000. So this will automatically mean that you made a profit of $500. If you can make 10 loss, the matter is not if. The point is this: if you understand your trading strategy, you can think long term, even when you make a loss, that out of 20 trades, I would end up being profitable. That is the mindset. I will end up being profitable. I will end up being profitable. So you see, this thing is very simple. There is no hidden magic here. Just any capital you have, but again, I must be sincere. Forex, you need good capital. I won't paint it for you and say, start with 10. I know some brokers, of course, our broker, they accept $10 to start, $20, whatever. But see, if you really want to be serious, you shouldn't put yourself, those small amounts makes you take unnecessary trade and make you just feel that, I need to grow this money. I need to grow this money. You are entering every trade. I need to grow this money. You are trading every single time. That's why you'll be making loss. Before you know, you blow $20. You fund it next week again, you blow $20. You fund in a month, if you calculate the $20 you've been blowing, it's $100. In 6 months, calculate the $100 you'll be blowing, is $600. So why not just maybe save the money properly? Know you have a huge capital, and you'll be at peace. You won't even need to trade every day. If you want to trade on your own, you can use the bots. The bot is trading for you. You are learning how to trade. There are many ways you can put yourself at ease. Some people just have $50. I'm not saying it is bad, but you want to start trading with $50. You put yourself under unnecessary pressure. Imagine having $1,000, for example, like I just said now. If you take just one trade, you are going to get $100. You can even close your trade for the month and say, I'm not trading again. What have you made? 1%. See, that is what investors need. Investors don't need you to be making 100% in a month. Serious investors that will give you millions to trade for them, they are not interested in you making all those heavy returns. So imagine you have $1,000. You make just 1%, which is $100. At least that's in our currency, that's at least 100,000. You can do something else with that. And you can close your trade for the month if you wish and say, I'm not trading again for this month. You have paid yourself salary. Yes, you have paid yourself salary like that. So let's go to something else. I don't want to spend too much time on this, and I don't want us to spend too much time for today because we have another class tomorrow and we have on Thursday. All right. So now somebody may be asking, okay, wait. If I want to enter a trade, how do I know how to know that, okay, it's $50 I want to risk, or it's $20 I want to risk? Fine. We'll find time to explain. This is why all these tools are here. And I know we have PIP calculator, but we'll go into those routes some other day. But I want to show us, before I round up this class, a very short class, okay? But before I round up, I want to show you a very simple way. You can just quickly calculate your risk and know your reward. So I'm going to swipe like this. For those of us who Who notice? Anyway, there's no point saying that anyway. That's not okay. So I'm just using this chart as an example. Or can I put it here? Let me just keep it here. Now you see this, these are tools. This is trading view. These are tools that you can use. All right. This, I hope you can see when I put my cursor here, you see something called long position. When I put my cursor in the next one, it's something called short position. If I click on long, let's say I'm anticipating a buy, for example. I'm expecting that the market wants to buy. For example, let me make this thing more interactive. Sorry, because I stretched this thing. I want to draw something. Where is this my tool? Okay, yes. Let's say the market is going up, down, up, down, up, down, up, whatever, and I'm expecting, let's say, like this. Let me leave it this way. And I'm expecting that, okay, this zone, let's say this zone, this is where maybe after calculating my fee, whatever, I'm expecting that I want to sell from here. And I feel I need to put my stop loss here. So which means I want to sell. I'm expecting that market will come up because of maybe this break. I'm expecting the market to come up to this point here, then I will sell down. Okay, so how do I know how much I'm willing to risk on this trade? So I will come to, don't worry if you don't understand this, you go to understand it, but I want to show you how you can calculate your risk sharply, all right? In case you don't want to use speed calculator. So I come here, remember, I say short is sell, long is buy, all right? So you come here, you click that, excuse me, what's going on? Oh, why is my stuff misbehaving? Very funny. Okay, so now remember I said I want to enter from this point. So you see this thing that I'm dragging like this is entry. So let's say I want to enter from here. I put it here. Remember I said I want to put my stop loss here. Stop loss is that if the markets, let me show you something. Stop loss, what does it mean? Just in case you don't know what it means. So let's assume that the market was coming like this now. The market does not just go up. Sometimes it goes up maybe because of news. Remember, I said this is my entry. So my stop loss, which is here, says what it means is that if the market does not actually come down and it wants to keep going up, once it gets to this place that I put my stop loss, it can take me out and it will exit me from the trade. But if I trade and I don't put stop loss, because some of us we trade, we don't put stop loss. What that means is that's how you can also blow your accounts. When you just sell, bam, or you just buy, bam, and you are on your phone, you want it to enter profit, so that once you enter profit, you will close. It may work for you 5 times correctly, but the time it will go against you, you will blow your account and lose your money. So don't trade without stop loss. Stop loss will help you against you blowing your account. So don't trade and just click buy and then you hold your phone. You want it to enter profit. The moment you click profit, you are closing. You enter again. See, the day it will go against you, all those small profits you'll be gathering, it will wipe your accounts. And that's how a lot of people have been trading, and then they say Forex is scam because you're not doing it the right way. All right? Or some people, I will show you all with this chart. So now, this is entry. Now, please, oh God, please guys, sorry, please follow me and follow me. It will change the game for you. You see, let's say I put my stop loss here. Let's say, okay, let me start from here. Did you notice something? Did you see, if you look to your right, this place? Please, guys, please look to right, where I'm throwing my cursor. Do you see these numbers? These are the price numbers. You see this line that I put my entry? My entry is at this gray line, 1.08. This is Euro USD. My entry is at 1.08062. Then my stop loss, this red line, see it red, is at 1.08164. So, but if you come here, click, you will see something called risk/reward ratio, 1.99. If I'm dragging this thing, you notice it's increasing. It's 2.43. You see? 1.6. So this is how I can know my risk to reward to be accurate in measurement. So I can put it at exactly 1 to 2. I can also show you a faster way I do this sharp. If you wish you want to drag it this way, you can be doing it. But another fast way I'll just show you. When I come here, you see this value here where it says stop 0.00102. And then you see 0. All these figures here. What this is telling you is that your stop loss is 10.2 pips. I'm sure some of you have heard somebody say stop loss 20 pips, profit 40 pips. All those language of pips, and you're like, which one is pips again? You know, this is what they are trying to tell you about. This is what they are telling you, that this is. So you see now, it's just decimal points. I don't want to use big grammar. Forget big grammar. Let's use simple language. 0.0102 that you are seeing here is actually 10 points. So this is how you can just know what the pip is. 10.2 pip. But how do you know which amount you will automatically lose from this? Please, you have to do. Yes, I have a calculator. I have a calculator. I should be able to. Where's my calculator? Let's do the practical. Calculator. Yeah. Please, can we all see my calculator? I just want to be sure, please. Can you see my calculator? Can you hear me? Can you all hear me? I hope I've not been talking to myself. Please, can you see?
Yeah.
Okay, thank you. I just wanted to be sure. Okay. All right. So now, remember, I said I want to risk $50. Come on, I'm trying to adjust this. Let me do something manual. You see, okay, this is how I do it manually sometimes. If I'm not able to drag it correctly to the 1.2 or 1 to 2, I just click on it, double click on it. Then I come here. All right. Sometimes I can make it a whole number if you wish. Sometimes I just make it a whole number, maybe 105. Some people like doing whole number, but it's not a problem. So see, stop loss level, tick 102. So I can times this by 2 to give me the accurate figure of 1 to 2. That's 204. This one, you don't need to bother yourself. See, it's just for me to get the accurate 1 to 2. Do you see it now? The risk to reward ratio is 2. But if you can drag it and get your exact figure, no problem. Me, I just like doing what can give me fast ease. So remember, I said we want to use risk $50. So how can we get accurate $50 to know how to type in our, maybe in your MT4, MT5, what will you now type? Which lot size will you type? Is it 0.1 or 10 or 5? Because some people don't know what to press. What should I press? Is it 5? So maybe when you are in a similar group, they say sell euro, so and so price. You actually say, okay, the price is coming here, but you don't know which lot size to use. You understand? So this is how you can know the exact amount you want to risk, so that when the market is going against you, you are not afraid. You know, okay, last I'll lose just $20 or $40 or $50. Your mind is already set that last is $50 I'll lose. Just drop your phone and be doing something else. So you see this 102. You will come to your calculator and type 102. For Euro USD, I'm telling you, this is how I do it too, and it's very accurate. Remember, I want to risk $50. So I will times this 102 times. I will be guessing lot size that will give me the accurate $50. So I can say times 0.2. You see, so if I use a 0.2 lot size on this 10.2 pips, it's going to, my risk that I will be risking is $20.4. But that's not what I want to risk. I want to risk $50. So meaning I have to increase my lot size. So I will go again. 102 times, let's say 0.5. Let's see what this will do. Okay, 51 is above, meaning I have to reduce my lot size. You see, it's above. Some people can leave it like this, but if you want to be accurate with your numbers, like me, you stop to 102, you go again. So I have to reduce now. Let's say 0.49. Maybe 49. Let's try what 49 will do. Okay, I can stick with this. So with a 0.49 lot size, you see, this is already $50 that I will risk. So I will now type on my phone. I can set a limit, or I can do market execution. Once market is coming to this place, once market is coming up, pam, 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 and it gets to this place, I can just click, pam, 0.49, and then put my stop loss at this place. So if it goes against me, last, I will lose $50. But if I win the trade, I will get $100. So accurate. No stress. So that's it for tonight's class. We still have a class tomorrow, so we'll be able to entertain, a lot more into this, and how you can use our trading indicator and strategy to maximize good risk to reward and make good money from it. So that will be all for tonight. Please, we'll just entertain 1 or 2 questions, please, so we can call it a night, because tomorrow is still another section. Thursday is still another section. So please, I'll just take a few comments, questions, and then we'll call it a night. Thank you. Okay, I think we have it. Okay, please, 102 you use is the price. No, 102, oh, I've deleted this stuff. 102 is not the price. Let me go back. 102 is not the price. 102 is the pip lot size, the pip, the distance between the 102. Okay, the simple language is the distance between your entry and your stop loss. That gave me 102. If I wanted to put my stop loss above somewhere here, you see that the figure has changed now. It's 142. I would have now times 142 times maybe 0.5, 0.4 to give me $50 that I know that I'm risking. So that's it. As you also notice, this is what you impute as your stop loss, not 102. It is the price level that aligns with your risk or your stop loss that you are seeing to my right. That's what you use, okay? But all the same, if you don't understand this, of course, that's why we have class tomorrow. That's why we have class next tomorrow. That's why we have training.
Hello.
Yeah, I can hear you.
Hello. Good evening.
Good evening, sir.
So from your explanation, that 102 is the pips.
Yes, sir.
Okay. Understood. Thank you very much.
Thank you, sir. All right. Thank you, everyone, for joining in. So we still have a section tomorrow, same time, 8 p.m., same link you used in joining in. This time around, don't just come alone. Come with your friends, come with your partners in business. And see, there's a lot we're going to be exposing tomorrow. We're going to be talking much more using, we shared that our indicator last time for those who were active participants in the live class. So, but this time around, I know we shared the video how to use it, but want to also, teach our unique strategy, how you can use good risk management, to be able to have good win rates. Imagine if you can just win 10 out of 10, you are up in profits. So every trading strategy, yes, have a rule. Hello?
With the indicator that was given,
yes,
there is that confidence that you win 10, all right, out of 20 trades. With that confidence that you win 10 out of 20 trades. In fact, we're looking at you having up to 70%. All right, but it's important that you understand that you grow in expertise. No matter what you're given, if you don't know how to use it, you might still not come out with, very good results. So what importantly, just as has been said, risk management is one of the key components for a successful career in trading. We must know how to maximize it. You just saw what he showed us here, that with risk management, even when you have a very bad strategy, all right, you can still come out better. All right, so it's important that you pay attention to risk management. There are other parts that we're going to be talking about, how to how to ensure that you you do not impair your psychology by the reason of too much exposure. So many things that we will talk about, especially when we bring the strategy or the indicator into play. We're going to bring the indicator into play tomorrow. So we'll look at it, and then I trust that we'll better understand the indicator and how to use it. So it's been good tonight for all of us. I really appreciate everyone in the house. In case you have any question, please prepare your question. We can meet tomorrow and have a wonderful time together. Okay, Feather, you can take it away.
All right, thank you everyone for joining me. I really appreciate your time. Thank you so much. See you tomorrow, same link, same time for another wonderful changing section. Have a good night rest. Thank you. Bye-bye.